Everyone, welcome back to Level Up with Dawn, where we talk about investments and property, and I sort of like take you guys through how I work with money to reach the goal, which is wealth generation for myself and also for future generations after me. So today, I just wanted to do like another my CIO video. Um, or investment diaries. I don't know what I want to call it yet. But I wanted to just like catch you guys up because I've been thinking a lot of different things around investments, and I'm just like, I'm not sure. I don't know what to do because I'm seeing like a lot of value in the equity market. Also, this is for entertainment purposes. I'm not a financial advisor. Please do not take what I say as advice. This is just stuff that I do. So I think I've told you guys that I had transaction capital shares, and I mean, those have turned out to actually pay off quite well. When I first got them, I was looking at the share price they used to be versus what they were at the time, and I was just thinking, okay, like if I can just, ride that, then I think I'd be able to make a lot of returns. And of course, this is assuming that they're gonna get past like the issues they're having now. But then they surprised us and they said, okay, no, we're gonna list We Buy Cars, and shareholders at the time got We Buy Cars shares. So now I've been able to like realize my profits or profits in general a lot sooner because We Buy Cars has done excellently since IPO, and like I got those shares for free essentially. So yeah, like I think that turned out really well, and because of that, I've been trying to see if there are any other opportunities like that in the market. And I think especially now, because we are in a time where consumers are, pressed, and so then the retail facing type of companies, they're also struggling. They're seeing their customers maybe can't pay off loans, or they're buying more on credit, like those kind of things, or they're no longer buying like the branded stuff at a grocery store. Instead, they're buying like no-name brands and whatnot. Like, you can see how all of these things interplay with each other in the market. And so one other share that I've been looking at was Pick and Pay, and they've been going through like their stuff for a little bit now, but it's sort of like accelerated to the point of like sort of like how Nampak did. Like they have a lot of debt, they need to alleviate that. The revenue is not as strong because consumers are struggling and all that stuff. And so yeah, like I've been eyeing Pick and Pay for a while, and last week I decided to like bite the bullet just because I thought I'd rather do it before they release results, because I know the share price chops and changes quite a bit. But also I did know that there was talk around spinning off Boxer and listing it. So I was like, ooh, okay, similar to transaction capital. But I don't think it was like a hard confirmation yet that they had given us. Then they had their results this week, I think on Monday, and now it's like it's there. It's like in their capital planning. They're like, okay, IPO, we're gonna get this much. We're gonna use that to pay debt, or So it's like and like the results, the actual financial results of the company were not good. I mean, they obviously in a position where they need to like sell bits and pieces of the business, or portions of at least, to like get back into a healthy position in terms of their balance sheet. But I think just because they've confirmed that this Boxer IPO is happening, the share price like did this. And that's literally, I think it's because people saw We Buy Cars. I mean, We Buy Cars, like on any given day, I think it can be like 40+% up from IPO day, the price at IPO day. And then I think maybe people are seeing that and they're like, oh, I wanna get on that wagon. So I'm glad I did. I'm glad I did. Um, and like, I mean, it's given me a lot of returns. But now I'm like, wondering on the property side of things, because I know I'm about to like start saving money on my loans again. And what I wanted to do with that initial saving was just like go back into the loan. You guys know, I'll link it up. Like that snowball method that I do in order to get my loans done quickly. But I'm just thinking that on the equity side of things, and I've only been in this like I'd say maybe a year strong, like I'm already 10% up. And if I can like get good returns, like keep my methodology going, because like I do look at the fundamentals of these companies while still being risk seeking and like making bets. And I'm like, oh, if I can make returns on the equity side that much sooner, build that portfolio. Because even like I love like when REITs do drips and stuff, because I'm like, just give me those shares. Like I'm trying to build this portfolio. Like I really want the dividends to be meaningful eventually. But like I think if I can just keep this momentum going, which seems to be working. And also, I mean, there's a lot of upside to the market. Like we're waiting for the first cut, and I feel like then, no, we're off to the races. Especially because the market prices are driven by anticipation, not necessarily the past. So I'm thinking maybe like instead of accelerating loan payments, I'll just have that go into buying shares. And then maybe I can just build it up that much faster, get dividends and all these different things. And I don't get dividends. I don't get dividends from my loan. You know what I'm saying? Get the dividends, reinvest, let it grow that much faster. Then I can like liquidate everything and then just pay off a loan lump sum, I don't know. If anyone has any ideas, if anyone has any thoughts, please let me know in the comments. But yeah, that's basically what I've been thinking. Who else? Like, who has been on my radar in terms of shares this week? Yeah, no, it was just Pick and Pay. I've been watching them quite a bit. Oh, you know what I've been actually thinking about? So, because the Bank of England and the European Central Bank, their inflation stats have been doing like really well. They're like going down back to target. I think their target is like 2%. And so like I think they're gonna be one of the first to cut. Although like people are trying to scare them away from cutting because they're saying like, oh no, then you're gonna make the exchange rate. Like who cares? Like we need to decouple from the dollar. I'm sorry. But I feel like those two central banks are gonna cut soon. And so I was thinking maybe because like I don't know how this happened in the JSE, but we have quite a decent helping of European based real estate investment trusts. So I've been looking in that sphere to like say, okay, where do I want to get in now so that when that cut happens, like the share price will do what it does. I'm almost, I wouldn't say I'm certain, but like, it makes sense. And like human behavior is human behavior. So that's like a theme I've been exploring. I'll let you guys know. I've been looking at Shaftesbury Capital, Lighthouse Capital. I'm already in Nappy Rock Castle. I'm already in Hammerson. Hammerson, I don't know, she's controversial a little. But she's done me well. Like I got her very, very, very soon. Like very early. Like when she was low in price. And I think I've made almost like 60% returns. on my holdings there just from price movements. It's crazy because it's like it's also a penny stock. Um, yeah, I'm already in Hammerson, so I don't know if I want to increase there. I may. Who else? There may be like the REITs that are European heavy. Like Vukile is in Spain more than they actually are in South Africa. Hyprop. Hyprop is in Europe, but they're in interesting European countries. They're not in the standard Poland, Romania. Like Hyprop has interesting exposure there. So it kind of like helps you diversify your European exposure, in a way. I don't know who else. Yeah, but I'm looking at like those European UK reads because I think there might be a play there. We'll see. But I hope you enjoyed this video. If you did, please leave this video a like, comment down below anything that you would like for me to talk about. Let me know if you are pursuing a certain investment theme right now. Yeah, let us know in the comments. But thank you for watching, and I'll see you in the next one. Bye.